Good morning. This is Ifya, the Money Lady. So today we're going to be talking about the different types of mortgages that they have that are really popular. Obviously, there's other types of mortgages. I'm not touching on the rehab, hard money loans when it comes to this, but there's different type of mortgages. The first mortgage we're going to talk about is going to be the veterans loan. We call it a VA loan, honoring the veterans, right? So let's zoom in on this. And these are the aspects of this loan that are really, really awesome that I love. So first of all, it's 100% financing for a purchase. If you want to do a refi cash out, call me. We can go up to 100% in certain circumstances to remove money from your property. So therefore, you have zero down payment required. So you have a savings up front, right? And then there's no monthly PMI cost. That is private mortgage insurance. What does that mean to you? Excuse me. Your payment is not going to go up by $200-300 for PMI. PMI is mortgage insurance that protects the mortgage company. So God forbid you stop paying your mortgage, you know the rule. You pay, you stay. You don't, you won't. If you don't pay, you won't stay, and they will take the money that they have accumulated from you paying that monthly PMI mortgage in addition to the property as well. You don't have that with a veterans loan. Also, it's highly flexible guidelines, okay? They offer flexible credit score standards, very competitive interest rates, and it's secured by the government. So it's government-backed loan. That's the reason why you don't have to pay the PMI, because the government basically vouches for you. That's the veterans loan, VA. The second loan that we're going to talk about is FHA loans and down payment support. So let's zoom in on this. So the advantages of the FHA loan is designed primarily for first-time home buyers, right? With limited savings, lower credit scores, and then the standards for FHA guidelines requires that you put down 3.5% down payment to permit the credit scores that they allow, which are 580, and they also go down to 500, but you have a higher down payment. Do I recommend that you get it at that low score? No. Do I recommend that you increase your credit score? Yes. Why? Because you get a better interest rate. So that's where that is, but that is the guidelines. It can go down to 500. And then the down payment assistance, we call DPA for FHA. You can pair that with the FHA loan. Well, depending on what state you're in, but most states that I do, which is the DMV and all of the United States, you can use down payment assistance. And so it does depend. They say it depends on the municipality for the down payment program. Eligible buyers can receive a government grant that's forgivable or not forgivable when it comes to the down payment. I have another slideshow for the down payment that'll go more into detail, but basically we pay the 3.5% down payment for you, and you choose whether it's forgivable or non-forgivable. If it's non-forgivable, you're paying a payment for 10 years. After 10 years, it falls off. Forgivable means that they're giving you a higher interest rate and you don't pay anything. But look for that other slideshow and I'll go into that program. Okay, this is the more popular loan. Every time you see a commercial and they're speaking really fast, 2.5% interest rate on the LIBOR, 1.1% on the index, the interest rate 5.25 is a conventional loan, blah, 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 and they're speaking really fast. When people speak fast, they're lying. They're hiding things. I particularly do not like the conventional loan only because, remember what I told you about the PMI? Conventional loan is for people. Number one, you can put 20%, up to 20% down or more. They do have some loans where you can put 3%, 5% lower down payments, but they're known for the bigger down payment portion of it. When it comes to conventional loan, it's a preferred market standard for people with really good scores, really good assets. You have $60,000, $30,000, $50,000 in the bank. You have equity in your bank account use this loan. Conventional loan is for private mortgage. It's a standard FHA. I'm sorry, it's a standard Fannie Mae and Freddie Mac product. They offer flexible down payments, like I said, as low as 3% for qualified borrowers. The loan to value also can go down to 80%, where you're putting 20% down, and then you won't have to pay the monthly mortgage insurance on the conventional loan if you choose to go that route. The DSCR loan, I also have a YouTube video. Go into my library and look for DSCR, and that'll explain this loan to you. But just in a nutshell, this particular loan is you don't show any of your personal income. It's ideal for a self-employed borrower or borrowers or active homeowners seeking to purchase a second home or cash flowing investment property, right? So qualification blueprint for this: instead of verifying your personal paycheck stubs, tax returns, and your employment records, the underwriter will qualify you with the loan entirely based on the property rental income. So whatever the rent is on the property, if you're buying a house and it's $300,000 and the rent is $3,500 a month, the fair market rent, when the appraiser goes out and they say, okay, I'm comparing this house to 4 or 5 different houses and the rent is $3,500, that means that your income is $3,500. The way that you qualify for this loan is that your payment, your new payment that I'm going to give you, is not going to exceed $3,500, right? If it exceeds $3,500, you can't do it. You're going to end up having to pay more money down. But like I said, go to that video and then ask me about this particular loan for investors where you don't have to show your income. Okay, now we are going to do how we calculate the DSCR loan. I sort of told you that before. They go by the gross monthly rental income, total mortgage payment, which is the PITI, principal, interest, taxes, and insurance. So they want to see that you have a positive cash flow on the actual rental property when it comes to that. Excuse me, guys. Okay, so the loan options side by side. Just pause your screen when it comes to this. This is basically everything that I went through with the VA loan, FHA loan, conventional loan, and the DSCR loan. And it's telling you the income verifications that you're going to need for those loans and what type of borrower is good for each loan. If you have any questions or concern, call me at 443-226-3610 and ask for Afia, aka the Money Lady, and I will get all your questions answered. You can also go to my website at www.stoprenting.biz. That's www.stoprenting.biz for all of the different loan programs. But the best way to get a hold of me is by my cell phone, 443-226-3610. And you can also email me at stoprentingdear@gmail.com. That's stoprentingdear@gmail.com. All right, this is a video on all the different popular mortgage products that are out there. Once again, if it doesn't make money, it doesn't make sense. Have a good one.